will learn one again. Control accounts. Now, at the beginning we studied prime entry books. We studied the prime entry books, sales day book, purchase day book, sales return day book, purchase return day book, cash book, and some other type of prime entry book. So, if you remember, how many types of prime entry books we learned? We learned prime entry books. Now my question to you all, how many types of prime entry books we learned?
6.
Which are?
Sales day book,
Okay.
purchase day book,
Okay.
cash and back,
Cash. Okay.
book, and sales return day book,
Okay.
purchase return day book,
Okay.
and general journal.
Very good. There are 6 different types of prime entry books or day book we call it. Now, if I pick sales day book here, what is the purpose of sales day book? To record what?
Credit sales.
To record only the credit sales. Okay. And if I put the format, this is my sales day book. Let's say I have 3 customers, A, B and C. Customer A, my sales value 1000. Customer B, my sales value 750. Customer C, my sales value 1200. So what is the total amount now? Let's say this is for 1 week. So what is the total value? 3. Now, this is actually before the double entry. Prime entry book is not part of double entry. After then, we will do the double entry. And when we talk about ledger, we said that there are 2 types of ledgers. One is nominal ledger, other one is real ledger or personal ledger. Nominal ledger is really the part of our root of our double entry. All the ledgers will come there. Asset, liabilities, fixed asset, current asset, sales, expenses, every single ledger, every single P account will go through there. Whereas personal ledger actually mainly 2, receivable ledger and payable ledger. When you talk about receivable ledger, it is not part of the double entry. It is to keep a track of the individual customer's record in that. So let's say I have 3 customers in this business. I will have one nominal ledger, receivable account, and I will have 3 personal ledger, which are A, B and C. Now, I need to pass double entry for this. I need to debit somewhere and credit somewhere. Where will I debit? Receivable. I will debit receivable how much? 3000. And where? So I will debit to receivable. And where will I credit? So this is clear. Now in order to maintain the track of individual transactions.
This number is an example, sir, right?
Yeah, this is an example, yes. So, in order to maintain the track of the transaction, what I will do, I will record this individual transaction in the individual customer records. I won't call accounts, I will call as customer records. So, 1000, I have done a sales to whom? Mr. A. So, I will debit 1000. 750, I have done a sales to Mr. B. So, I will record in Mr. B's folio. And then 1250, I have done the sales to Mr. C. Now, at any point of the time, any given regular intervals like every day, every week, every month, if you check the total of this, that total should be equal to the total of this. Now, how much is the total here now coming? 1000, 1750, 3000. And that 3000 is material. So, what we are doing is, we are, for the sake of the double entry, for the sake of preparing accounts, we maintaining a general ledger. In that general ledger, I have an account called receivable. On the other hand, I maintain individual records to track the transaction in order to monitor the activities between the customers. Now, the concept of control accounts is actually a part of internal control requirement in order to avoid any fraudulent activities. Let's say the general ledger is done by the bookkeeper and the individual transaction will recorded by the customer clerk, the receivable clerk or customer clerk. And if the customer clerk having some relationship with the customer, then he may do something. How will you find out every regular intervals? If you do a reconciliation between these two, you will find out. So the control account is a control tool, mainly to avoid fraudulent accounting practices. So the control account is a control tool in order to ensure no fraudulent accounting practices. No fraudulent accounting practices. This is what they call the requirement for, or the description, or the justification for control accounts. Now, when you talk about this receivable ledger, we can also call it receivable control account. Now, when I have sales day book is one of the primary book, cash book also one primary book. So in the cash book, you may have collections from the customer. So that collection, you should record it here also, right? So cash. Likewise, you may have several items. When as I explained to you receivable, similar scenario will be there for payable. So now let's try to find out how a control account will look like. When I say format of control accounts. Remember, we have two control accounts, receivable control account and payable control account. is what? The amount of money that the customer should pay me. Now, there are also sometimes possible, we may have credit balance under the receivable. Let's say I have done the sales to you 1,900. You paid me 2,000. So there is $100 I have to pay you. So that becomes a payable. So I may also have credit balance in receivable account. So I have closing balance. I may sometime also have credit balance. Then I have credit sales. Then I have cash collection. Then I have irrecoverable debts, the bad debts. I have sales return. I see, sometimes a customer can also become a supplier. Possible or not? Possible. So, I have to pay him 2,000 and he has to pay me 3,000. So, effectively, how much he should pay me? 1,000. So, this 2,000 we can offset between us. Correct? This we call it offset.
Mr. Muhammad, how is this brought forward in this two sides?
That's what I explained you, brother. Now, is the customer, receivable, normally debit balance.
Okay.
But some customers, they may pay you more than what they have to. Then they become a credit balance. So that also we need to maintain. For example, if this is 100,000, this will be 500 or 1,000 extra. Clear? So, and then you also have cash, recoverable debt, sales return, offset, discount. Allowed. These are the common items that you will see in a control account.
So this discount, you have two type of discount.
Discount allowed and discount received.
Cash discount and credit.
Yeah. Did we discuss about discount?
No, that's
Then this is the topic that we need to
Ah.
discuss. Okay, let me discuss that after completing this point. So let me balance this now. So this will be then like this. What is this? This is receivable control account. Same like we have payable control account. We have opening balance, credit balance, opening balance, debit balance, closing balance, credit balance, closing balance, debit balance. And then we have credit purchases. And then we have cash payments, which we pay to supplier. We have discount received. So we have discount received. And then we also have purchase return. We cannot have irrecoverable credits. We will have irrecoverable debts, but we cannot have irrecoverable credits. And then we have something called this offset. Suppose if this number is 75, what should be this number?
minus
I mean, plus minus forget it. If this number is 75, how much should be here? There also 75. It will be the same number, both places. And this is what the format of payable control account. Okay. Is that clear now? Now let's talk about discount. What is discount? People go and ask for bargaining and for reduction. Did I share any story related to discount? You know that I talk about this Indian guy, that Sardar. You know who is this Sardar?
Sardaji.
Sardar, you know him? How he is look like? This type of people. Okay, anyway, what is the story is, these people are from Punjab. Punjab is somewhere north of India. And then Chennai is south. He has a friend in Chennai, he came to Chennai. Then he spent time like a week or 2 weeks, and then it's a time for him to go back to his home. If anyone goes on a vacation, finishing their vacation and returning, they used to do shopping. Normal practice, no?
Factory out.
Huh?
Factory out.
But they are off,
No, no, going to down.
then stop.